Hello and welcome to today's webinar, which we're delighted to be running in association with Avalara. My name's Jo Morgan. I'm the Editor-in-Chief of ACCA's Accounting and Business magazine. Today we're going to look at what the future of VAT looks like in the digital age and how companies can stay ahead of the ever-changing tax landscape. Here to discuss the challenges and solutions are Avalara's Ruby Buckland, who's Senior Director of Strategic Initiatives, and Alex Baulf, who's Senior Director of Global Indirect Tax. Before we get started, I just need to run through a few housekeeping issues. Before the presentation, once we start, you'll find that the slides move on automatically as our speaker presents. But if they're not progressing, you can refresh your browser by clicking F5, or Mac users can connect Command and R. You can access the slides from the resources area as well. We'd be delighted if you sent us in some questions, and you can do that at any time using the question area on your screens. We'll go through those in a Q&A at the end of the presentation. The whole webinar will last about an hour. You can enlarge the slide area of your screen by grabbing and dragging the bottom right-hand corner of the slide area window, and you can find a link to the slides in the resources area at the bottom of the screen. There's also a help button if you have problems with technology. Finally, turning to CPD, if you're an ACCA member, you can count this webinar towards your CPD if it's relevant to your career. You can apply the learning in the workplace and can provide evidence that you've joined us today. For that evidence, we have provided a personalised CPD certificate in the resources area of this webinar. So that's it for the introduction. Now it's time to hear from our first speaker. So over to you, Ruby.
Thanks for that introduction, Jo, and thank you for everyone that has dialed in today. So welcome to VAT in the digital age, and hopefully by the time we end this session, you'll have everything you need to know for 2022 and beyond. So a little bit about who we are and who is with you today. As Jo said, my name is Ruby Buckland, and I currently am a Senior Director at Avalara looking after our strategic initiatives. What is that, I hear you cry? Well, really, it's focusing on anything that is deemed strategic for our business, and we'll be covering quite a lot of that strategic content today during this webinar. Prior to joining Avalara, I spent nearly 2 decades at the Big Four and then came over to the orange shiny lights of Avalara in 2018. So that's a little bit about me. Alex, would you like to say a couple of things about yourself?
Thanks, Ruby, and good morning, good afternoon, everyone. Yeah, I'm Alex Baulf. I'm Senior Director for Global Indirect Tax at Avalara. My role is to track big VAT, GST, indirect tax legislative change across the globe, so we can keep our partners, our customers, and more importantly, our products and content up to date. My background is very similar to Ruby. I spent over 16 years as a VAT indirect tax advisor, spending that time in global 6 size firms, including a stint in the US, where I was a global VAT manager for a couple of years. But yeah, very much looking forward to this today. This is very topical, lots of different areas that VAT in the digital age could touch. So yeah, looking forward to a great discussion.
Thanks for that, Alex. And by my maths, I think that's about nearly 4 decades in the world of VAT between us. So I think that's quite crazy when you stand back and think about that. So moving forward and having a look at the agenda today, we'll spend a couple of minutes about Avalara, so you know who we are. And then we'll move into the main subject for today, which is VAT in the digital age, the what, the why, and the when. And I don't want to have any spoilers, but I'll just cover off the 3 main areas, and they are the single VAT registration in the EU, e-invoicing and digital reporting, a very hot topic, and then the platform economy. We'll also do some next steps for VAT in the digital age, and we'll summarize with some key takeaways for everybody that's listening. We'll then have Q&A, so please do keep those questions coming in, and we'll try and get through as many of them as possible. So, who is Avalara? Well, we were established in 2004, and our little strapline is disrupting the status quo of global tax management since that date. What do? Well, we provide a fast, easy, and accurate way to manage taxes in the indirect tax world. We currently have 30,000 different customers globally and 1,000 pre-built integrations across all of our products. We've also grown to have 22 offices across 4 continents, coming closer to home, we're headquartered in Europe, in sunny Brighton, in fact, and we also have offices now in Germany, Belgium, Romania, France, and Spain, and that's growing every month. Our cloud-based tax automation solutions help businesses in many ways, but some of the key things to highlight is being compliant, obviously, reducing their risks in the area of indirect taxes, and also streamlining and standardizing processes. Our overall aim and mantra is trying to make tax less taxing. So that's a quick overview about who we are. One more thing to say, actually, is that our solutions and services cover everything from registrations and licenses through to real-time calculation, e-invoicing, and also submitting final returns as well for indirect taxes. So over to Alex now to go into more detail on what is VAT in the digital age.
Thank you, Ruby. So on the screen now is how the European Commission summarise their big initiative. It's an action plan for fair and simple taxation, underlining the need to reflect on how tax authorities can use technology to fight tax fraud, benefit businesses, and also whether the current VAT rules need to be adapted for the new digital age. So it's really looking at the use of technology by tax authorities, by businesses, but also responding to technological innovation and the growth of the digital economy, the gig economy, new business models, which, maybe the VAT system, wasn't really designed to deal with. And as Ruby said, there are three main elements to VAT in the digital age. So we're looking at moving towards a single VAT return, especially for SME-sized businesses, and in particular, the e-commerce sector. Also looking at e-invoicing and digital reporting. And then finally, how the platform economy is taxed. And this really is a major EU VAT policy initiative. As you'll see, there's been various legislative steps already as a precursor to this. And this has been a very lengthy process in terms of gaining feedback from businesses, from business associations, from advisors, through a very large public consultation. And then, finally, there'll be a gap analysis, impact assessment, and then finally a proposal from the European Commission on what this will look like. So why? Touched upon some of the drivers already. The VAT gap continues to grow. Currently around 134 billion euros of VAT that should be collected by tax authorities, but is currently going missing. Going missing for a variety of reasons. Fraud, very high up there, but also errors, and also, perhaps actually uncertainty on that tax treatment too. This has also been driven by the amount of data that tax authorities are now able to collect. It's not just businesses that are going through their own finance transformation projects and journeys. Tax authorities are doing that themselves. Within the UK, making tax digital is seen as quite a small baby step for a lot of businesses compared to what the rest of Europe is doing. But that's a great example because HMRC are actually building a huge infrastructure behind the scenes to be able to receive data. They're actually one of the largest customers of SAP in Europe. And then it's also a response to the trend, the direction of travel we're seeing around e-invoicing and digital reporting. Almost every single month, there's another country within Europe or around the globe that's announcing a new mandate, a new requirement to either raise invoices electronically in a predefined format, or submitting transactional level invoice data to the tax authorities. And it's pretty much a Wild West. Tax authorities, governments are bringing in their own requirements, their own platforms, their own file formats, their own requirements around, which intermediaries are involved, what signatures you require. So it's very difficult for businesses to actually look at this holistically, implement a scalable solution. So the European Commission's looking at this and saying, look, we already, govern the VAT rules. We have the VAT directive. Can we look to provide some harmonization in terms of all of these e-invoicing and digital reporting requirements? And it's that digital reporting element as well that the Commission thinks can help solve the fraud issue, the cross-border fraud issues that can lead to that VAT gap increasing. So the journey so far, October last year, VAT in the digital age was confirmed, as one of the major initiatives on the Commission's work programme for 2022 this year. There was a virtual fiscalis workshop held later that month, reviewing a report that had been commissioned from an external consultant, looking at the possible options and issues relating to these three areas. That report is still in draft, and when that's finalised, taken in to consideration, views from the public consultation, that will then be presented back to the European Commission and should play a very key role in the policy direction. The European Parliament have actually voted and adopted a text on the implementation of the sixth VAT directive, what is the missing part to reduce the EU VAT gap. This actually sets out the broader legislative objectives and goals for the majority of VAT in the digital age, particularly around moving to a single VAT return, reducing costs for SME businesses and the VAT compliance burden for them, as well as embracing e-invoicing, but at the same time looking to reduce the options, trying to move towards harmonization, again with a focus on reducing the VAT gap, but also reducing the cost burden for businesses. There was a public consultation from January this year that finally closed about a month ago. Quite a big response. So 322 responses in the call for evidence. There was a online survey where the European Commission set out various different options, as well as trying to understand the views of businesses. Where are the key pain points? What could the Commission do to make things easier for businesses? And then around now, in the last couple of weeks, the final impact assessment was being delivered to the European Commission's Regulatory Scrutiny Board to be discussed in a meeting towards the end of this month. So quite a lot of work has already taken place. But what I will say is, we won't today be able to provide, with certainty what the changes will be. There are certainly very key goals, aims here. I think there's a lot of enthusiasm and goodwill, not only at a Commission level, but across the EU member states to find solutions. But I think, right up to Q3 this year, there will be a lot of debate, there'll be a lot of negotiations, and, only then will we really see, what is on offer. So high-level helicopter view here, what are the key areas? Well, under the single VAT number work stream, the goal is to reduce the number of VAT registrations a typical business would be required to have to trade in the EU. So in particular, looking at e-commerce, building on the success of the e-commerce package that came into play from the 1st of July last year. Ultimate goal of reducing the cost and admin burden. Most likely extending the use of the one-stop shops, the OS and the iOS, which again, came into play last year as part of that e-commerce package. And a bit later, I'm going to provide some feedback on that from the first 6 months, some really powerful stats coming out of the European Commission. In particular, we're also looking here at certain scenarios, use cases for e-commerce businesses. So one of the reasons why a lot of businesses still have to register in several European member states is where they use certain marketplaces and use the marketplaces' warehouses as fulfillment hubs. They have to register because the movement of those goods between warehouses across member states is currently seen as a deemed supply, a taxable supply, requiring the business to register in that warehouse location to report the movement of the goods in. And then finally, this initiative is also considering the extension of the reverse charge for B2B supplies. So quite a few European member states already have this in place, countries like the Netherlands, France, Spain. If you're non-established and you're providing a sale of goods to a business customer in that country who is VAT registered, instead of having to register for VAT there, the customer can self-account for the local tax due under the reverse charge mechanism. So there's a lot of appetite here to make that compulsory, broad application across every single European country. Again, trying to reduce the number of scenarios that will require a non-resident business having to register for VAT. Moving on to e-invoicing and digital reporting, looking to see, can we move towards a more harmonized common standard for e-invoicing across the EU? As I said, it is currently the Wild West, with every country government really doing their own thing. Can we see a gradual introduction of mandatory e-invoicing across the EU? This is already taking place in a lot of large EU member states. That the number of countries on that list will grow over the next 2 years, and we'll talk about some of those in a bit. And also, how the issuing of invoices will take place. Can the Commission, set some broad principles here around the model, around the systems to be used, around certification? How can they guarantee data protection? There's a lot of countries implementing digital reporting of transactional level detail, and that often includes B2C transactions. So a lot of GDPR concerns there, a lot of kind of Eastern Central European countries want the European Commission to look at that and find a solution. And then finally, looking at this through the lens of detecting fraud. So to close that VAT gap, what do member states have at the moment? Well, every EU country submits EC sales lists. So that EC sales list, tracks typically the aggregate value of sales of goods and services to businesses in other European countries. But in reality, that's not enough to really follow the goods, to understand what's happening at a transactional level. So this is looking to see, if we can replace that with a single European online reporting system. And then finally, the platform economy. So there's already been, rules brought in as part of the e-commerce package on marketplaces. So already online platforms that deal with the sale of goods. But actually the platform economy, the gig economy is growing at such a fast pace. It's very innovative in terms of the model. It's bringing together, a lot of new actors into the supply chain, which maybe the current VAT legislation doesn't really provide clarity on. So it's looking at the clarification on the nature of the actual services provided by a platform, the role they provide. Are they acting as principal or an agent? What services are they providing to their customers? Clarity on the customer's VAT status. Within the gig economy, a lot of people are doing this as a hobby, as a second job. Are they in business? Do they have a VAT registration number? How do you treat your services to them when it's cross-border? Do you charge VAT or do you not? Also, looking at, does it make sense to have a deemed supplier regime for the digital platforms? So similar to the rules that were implemented to marketplaces last year. And this is an ultimate game and goal of leveling that playing field, leveling the playing field between businesses in the traditional economy, and this new platform gig economy. And also looking at, can at a European level streamline the record keeping obligations for businesses. So I'm now going to look in a bit more detail at the single VAT registration initiative. And as I said, this is really trying to build on the success of the e-commerce package that was introduced last year. As a quick reminder, what happened there were the distance selling thresholds were removed. So those were, traditionally 35,000 euros, 100,000 euros per annum. Those were completely removed and replaced with a pan-European 10,000 euro threshold for all EU sales, so really just focused on SMEs. The low-value import VAT relief, the 22 euro limit, was completely removed, so every single import into the EU became taxable. But then the European Commission introduced more streamlined registration and reporting and payment schemes, the one-stop shop and the import one-stop shop. And the import one-stop shop is for goods, individual consignments under 150 euros, entering the EU, any European country from outside of the EU, VAT charged through your iOS registration at the point of sale. The goods freely clear the border with no additional tax or duty levied. This has been hailed as a major success. So you'll see on the screen now some quite powerful statistics from the European Commission. Most of these are in the first 6 months of operation, so to December last year. So in reality, a lot of these numbers have now increased. Over 8,500 businesses have registered for iOS. Maybe you'd think that would be a lot higher. I think our original estimations were, 1.2 million businesses would be affected by these changes. And I think really that's shown the success of the marketplace deemed seller provisions, because in reality, the vast majority of businesses outside of the EU, no longer have to register for VAT within the EU, because the marketplace is being responsible for that, using its VAT registrations, its iOS, to make the sale to consumers. And European businesses have also been taking advantage of this, almost 95,000 businesses registering for the one-stop shop. So instead of having to register in every single European member state where they make a sale to a private consumer of goods, they can report that through their home tax authority through a single pan-European VAT return. So streamlined reporting, one payment, one currency. And the financial contributions at a commission level have really increased too. So a lot of additional tax being collected. And it's basically that success that the European Commission wants to build on. So how they achieve those earlier goals is still to be confirmed. In the public consultation, the European Commission set out 9 different options. The vast majority of these are not mutually exclusive. So in reality, the European Commission could pick one of these. It could pick 7 or 8 of these. I'm going to just talk about a few of the highlights here. One is looking to use the one-stop shop for intra-community movements of goods. So when you're transferring your own goods between warehouses, in particular to marketplace warehouses where they fulfill the goods for you, this would avoid having to have registrations wherever there's a warehouse. There's also talk of extending the one-stop shop to include an input tax deduction mechanism, so to allow businesses to recover VAT through that return too. Again, a lot of businesses are registering in countries so they can recover tax on local purchases, maybe VAT upon import. So that is another option being considered. Number 5, the reverse charge, extending that to all business-to-business supplies. So again, as I said before, trying to remove that obligation to register even for business-to-business sales. These options then look at iOS and how can that be scaled to again, reduce the number of VAT registrations required. This is interesting, removing the €150 threshold. So actually iOS could then be used for any goods being sold from outside the EU to consumers inside. So, rather at the moment where a business has to consider, how do I navigate that customs border? I can either leave it to the customer to pay the import VAT, a very negative customer experience. The goods often get stuck at the port. The customer gets, a letter demanding tax, duty, and a large admin fee put on. Or, some sellers are registering for VAT, acting as the importer, incurring tax at the border, having to recover that, and then charge VAT on that local sale with a local tax invoice through a local registration. Not an ideal seller experience either. The complexity there is €150 was first picked because that's also the customs duty threshold. So the Commission is going to have to do a lot of work there to make this work from a practical perspective, because that customs duty will still have to be paid somehow. iOS is currently optional, as a streamlined simplification. There seems to be a lot of support to making this mandatory, as well as making it mandatory maybe with a threshold. So similar to that threshold for SMEs within the EU of 10,000, that's another option on the table. And then finally, a slight tweak on that, making it mandatory, but just for the marketplaces. And, in my experience, most of the marketplaces are using iOS. Why wouldn't they? Because, it is a much streamlined registration and return process. Some other quick considerations. The idea of movement of own goods has really got the attention of the Commission and Member States. This is a really big goal. There's a lot of support around it. The real question is going to be how they achieve that. There are lots of different options available. There are pros and cons to them for businesses, for tax authorities, for the Commission. There's a lot of debate at the moment. So I was in Brussels last week at a round table to discuss this with the European Commission. And at the moment, everything is still on that table. And there will be a lot of discussions, negotiations as the weeks and months move on. We could see some interaction here with the new digital reporting requirements, that other part of this big initiative. We could even see marketplaces acting as a new role, as a kind of representative for traders, to ensure they're being compliant. We could even see the use of the SAFT for us, the SAF OSS. So this is a XML file that the marketplaces currently submit and intermediaries currently submit to show all the different transactions sold to consumers in the EU, so a tax authority can audit that. There's a lot of thinking that this could play a very key role, because this will allow the tax authorities to have more visibility. Even if there are less registrations, they'll still be able to follow those goods, spot fraud, and ensure that the correct rate of VAT is being applied. Right, Ruby, I'm going to pass over to you now to look at e-invoicing and digital reporting.
Thanks for that, Alex. Some really good content there and a lot of options being considered. And please remember, everyone listening, that we will be sharing slides in the console, the resources console, so you'll be able to have a look at that further in your own time. So let's now move to a very exciting and fast-paced area, which is evolving incredibly swiftly. Actually, in response to this, Avalara itself acquired an e-invoicing business just last year in April, which is now part of our product suite, and I've been hugely involved in. So this is incredibly close to my heart. As Alex has referred to, the direction of travel is very clear, with government shifting towards more digital reporting and e-invoicing mandates across Europe. It's probably worth taking a moment to just consider that there are not just the tax-driven benefits and mandates here. that we've got to think about, but also other business benefits such as cost savings related to e-invoicing and moving away from paper, reduction in payment cycle, and also the green agenda as well, which is obviously quite a popular topic at the moment. As Alex outlined at the start, there's been a huge difference today in the scope of mandates that we've seen come out across the world, and more specifically for this webinar in Europe. And the range can vary in the form of the types of formats requested, the data that governments are asking for, the type of platform that you must submit this data on, the model that's been selected for submission, and so on and so forth. And it has to be said that this has created a bit of a barrier to entry and to scale, actually, to scale cross-border, that is, for many multinational businesses. Now, the slide you see on the screen at the moment shows at a snapshot the different European countries that have got e-invoicing mandates either in place or that we know of that are forthcoming. And at just a quick glance, you will see some of the different models that there are currently in existence and those that are on the horizon too. Okay, let's take a couple of these. So it ranges from QR codes for Portugal to the very famous, or infamous, should I say, a pre-clearance model that we use in Italy with SDI. You know, that was initially launched in 2019 with quite a limited scope and has expanded out over many years. It's also been held quite a success with reducing the VAT gap across Europe and actually specifically for Italy. So on that subject of the scope widening for Italy, let's just look at that in a bit more detail. Typically, when a country actually rolls out these mandates, they do it in a phased manner, and that is normally based on different supply types and taxpayer profiles. So our experience to date is that the sequence tends to be B2G invoices first, as they're the easiest to enforce, followed by B2B invoices for the largest taxpayers, as they typically have quite a lot of resources to comply and the figures at play are a lot higher. And then B2B invoices for all taxpayers, moving down to B2C invoices, and then lastly, foreign transactions. Now, in response to all these differences in requirements, businesses have been struggling. I mean, it's hard, and they've turned to local providers typically to give them an answer where needed for Italy, for Spanish FII, for Hungarian live reporting, and so on and so forth. That's not that easy to maintain. It's not that scalable either. And there's been quite a large effort to ensure that businesses are compliant and also future-proofing to ensure that whatever mandate comes next, they can actually respond to in a timely fashion. Also, going with local providers has led to quite a complicated and messy ecosystem that leads to internal development being required, difficulties to maintain the requirements and the mandates, manual entry, and then taking information and submitting it to web portals. As I referred to earlier, a solution that's not really very scalable, the risk of human error, and also multiple points of failure that can also occur there. So what we found in the market is that businesses are typically looking for, dare I say it, kind of one tool to rule them all, or one provider moving forward, so that they have faith that whatever is coming around the corner, there's somebody there to support them. Now, invoicing looks like it's here to stay for a bit, and it's hard at the moment, let's be honest. It's a little bit Wild West, as Alex referred to. But what does the VAT in the Digital Age consultation propose in this area? Alex, are you able to expand a bit further, please, on that?
Hi, Ruby. Yeah, absolutely. So, you know, with this current pace, you know, you look at that roadmap of countries you just looked at. You know, we're seeing really big European countries moving ahead with this. You know, France in 2024, Spain in the same year, Belgium and Poland next year. You know, Germany probably not that much far behind. There needs to be common standards, or at least guidelines in terms of, you know, minimum information, you know, guidance to tax authorities, governments on how to introduce this. There also seems to be a lot of enthusiasm to make it easier to introduce e-invoicing. So, you know, with that long list of countries, you may actually find it hard to believe that it's actually against the European VAT directive and the invoicing directive to bring in mandatory e-invoicing. Back in 2010, the European Commission said, we appreciate the advances in digital technology. We want to put digital and paper on a parity. But what they also did, they said, it can't be a unilateral decision by a supplier or by a country. The customer has to actually agree to receive an e-invoice because they may need the infrastructure to receive that. They may prefer to deal with paper. Likewise, the rules say that a government can encourage e-invoicing, and set requirements, but they also still have to keep paper as well. And that's why all of these countries have either sought or they're currently seeking a derogation from that directive, basically asking permission for the Commission to introduce it. Poland recently got the green light for their KSEF e-invoicing system. So one of the low-hanging fruits that the European Commission could do is just make it easier. They may say, actually, you're within your rights. We no longer need paper as an option. So there's a lot of appetite for that. The European Commission is also looking at the different models. What is the best model to make this work in terms of how a tax authority can validate and spot fraud and obtain the necessary data it needs to do its role. But at the same time, how can they make this as friendly as possible for business and the technology infrastructure behind that? So the term a clearance system or a CTC model getting a lot of commentary at the moment. This is seen as one of the possible favoured models, where the tax authority will be able to validate, provide clearance to an invoice before it's then routed through to the customer. Lots of issues there to consider. From a tax determination perspective, you want to get the tax right first time, because if you don't, the tax authorities might be able to spot that and actually stop that invoice going out. And then the big issue here is interoperability. So the interoperability of systems. And that basically means, how different e-invoices, across different standards can still be used cross-border, how they can interact with different governmental systems, different e-invoicing networks. So invoicing can actually become a proper cross-border business as usual process, not just a kind of parallel tax reporting process. And we actually already have a European standard for e-invoicing of such, EN 16931. I'm sure you already knew that. That is a standard that was brought in about 5-6 years ago, looking at providing a common standard for European public procurement. So, B2G. And actually, in the last couple of years, there was the final deadline for every single government body within the EU to be able to receive and process e-invoices meeting that standard. So we've already got that level of interoperability across the EU for B2G. There's a lot of talk about, can that be scaled for business to business too? We've seen this already. Italy actually scaled, its B2G e-invoicing platform, the SDI, for B2B back in 2019. There is very strong rumor, understanding that Belgium is about to come out and announce that it will be using PEPL, which is actually based on that European standard for its B2B mandate in the next year or so. It's already bringing that in for mandatory B2G transactions. And then finally, the Commission is also looking at the role of the recipient. The tax authorities, it seems will have the ability to reject an invoice, to approve it, to validate it. But what about the recipient? Will they be able to do the same? Will they need to report the data themselves? Do we need symmetrical reporting? Do we just need one party doing that reporting of data? Do they have the ability to refuse that invoice too? So lots of debate, lots of discussion, lots of different models on the table. But hopefully, we move forward to a bit more clarity, a bit more guidance. Hopefully, some key guidelines in terms of the format, the standards. So this can really become a genuine pan-European change the business process rather than just a kind of local country mandate where a business just needs to tick the box. And then looking at digital reporting, so this is data typically on cross-border sales. So transactions that may typically actually escape any invoicing mandate because that's typically domestic business-to-business transactions. There's talk of e-invoicing being the preferred option here. So e-invoice being routed to a tax authority, so that's how they get the data. There is the idea here that data should only be shared once. There shouldn't be a burden on taxpayers to have to share the same data or subsets of that data more than once. Let's try and streamline this. And then, again, like e-invoicing, do we have a centralized EU system? So, the data gets shared to one big government platform run by the European Commission? Or do we have a more centralized model where there's individual platforms collecting that data on a country-by-country basis, and that then feeds up and consolidates at a European Commission level? And that's actually how the VISE database works today. So actually, if you go to the VISE website, you validate a VAT number, there isn't one big database at the European level. It's actually decentralized, connecting individual databases across the EU. And this is seen as quite a good idea because it avoids having that single point of failure. And then looking at that data to be shared under digital reporting, will the European Commission agree a core data set to have? Will it be a kind of core subset of an e-invoice or all the invoice data shared? It's been discussed at a committee level. Is it actually more complicated to make a business filter that data out, rather than sending it all? And as I touched upon before, there are still GDPR concerns as well. If there's the name, data, other sensitive information of private individuals from B2C transactions, how does that get addressed? Back to you, Ruby, to talk about the platform economy.
Thanks, Alex. I'm a bit conscious of time as well. I think we might need to speed up, so I will do my best to do that. So let's move to the platform economy. Well, what is it? It's one of those terms where perhaps it's worth taking a step back and thinking about what it is. Well, we are seeing the tendency for commerce to increasingly move towards and favor digital platform business models. And really, that's kind of part of everyday life for us now. You look at some of the descriptions written on the screen that describes it in more detail, and I won't read them out. You can read them yourselves. But it's where essentially a platform is bringing together three parties. Now, we use these platforms in everyday life. I won't read out brand names, but a famous cab app with 4 letters in it, which we all use very regularly, or perhaps other sites that we use to book accommodation for short stays. We all use this as part of everyday life. Now, it's worth saying that based on the success of the marketplace rule changes in 2021, plus the platform rules for digital services, the EU Commission is designed to look at this in much more detail as part of VAT in the digital age, and whether platforms for some of these more gig economies should effectively be collecting tax on behalf of the government. So as we referred to, we already had legislation introduced for marketplaces last year, but this will be much, much wider, and it will impact many more services that we use regularly. Typically, the underlying suppliers would be accountable for the accounting of any tax that is due, but often they fall under VAT registration thresholds and therefore under the VAT radar. Now, this could lead to an uneven competitive playing field where suppliers are able to charge VAT-free prices. And then when you turn to the actual platform providers themselves, unless there's really a government push or a mandate, they won't really want to account for the tax because it's simply more work, and it would also make them less competitive for providing the end service to the end consumer. Now, what are some of the key sectors that could be targeted by this platform economy? Well, they range from the provision of goods, and now, admittedly, some of these may already be captured by the marketplace rules, but if we're looking outside of those. Accommodation, we've already referred to some of the apps that we use to book accommodation. Transport services, including delivery of items as well. Financial services, the types of which really are yet to still be defined. Professional and household services, such as ordering kind of beauty treatments or cleaners to your home to come and clean your house. And finally, advertising and exchange of information-related services. Now, we think this is going to be actually quite a hard nut for the European Commission to crack. There probably won't be a one-size-fits-all, but perhaps different segments that need to be handled in different ways. We can take Canada as an example, who've already been looking at this, and they decided against a broad brush approach and decided to start just with taxing transportation and rideshare apps and accommodation booking apps. This may in fact be what the European Commission does. And one of the questions in the consultation is actually, can we just introduce this for transport and accommodation initially? So let's have a look at some of the options being considered as part of VAT in the digital age. I'll kick this off and then I'll bring our expert Alex in. So one of the approaches is, going with a pan-European consistent approach. And we turn to the age-old debate, who is actually making the sale? So by definition, a platform would actually be an intermediary and provide access to the end service good. However, arguably, the man on the street or the woman on the street will think it's actually being provided from the platform that they're logging into to use. So often it's not clear, depending on whose logo it is. Is it white labeled? What logo's on the receipt, etc. And it's blurring the traditional models that were in place for VAT. Now, some platforms may actually want to handle the VAT, as it makes it easier for all the parties in question. But the question does remain, if they are not actually the principal in the transaction, what are they providing and who are they providing it to? So, Alex, what are your thoughts on this and some of the options that are being considered by the European Commission?
Thanks, Ruby. Really good summary of that. What I think is being considered is actually trying to leverage some other work the European Commission has already done in similar areas. So, already mentioned the deemed marketplace reform that took place last year. So making the marketplaces responsible for accounting for the VAT on the sale, having some sort of deemed sale for VAT purposes from the underlying seller to the platform, to the marketplace, to streamline that. There is talk of having presumptions and rebuttals. So, this language is very common in the US for sales tax, but first came to our attention here when the EU brought in rules for digital services and telecoms back in 2015. So there's actually rules in place for online platforms that sell digital services that if they can't rebut certain presumptions, they are actually seen as the party to handle the VAT. So examples there are, does the platform set the terms and conditions? Does the platform authorize the payment from the seller to the customer? Does the platform actually authorize the delivery of the service? So it's things like that I think may be replicated or at least influence where the Commission may go on this. And ultimately, we will probably see a deemed supplier regime. But as you say, will we have a very broad brush approach? I expect not. I think, what you said, maybe following that Canadian GST model, maybe focusing, on some key sectors first. I mean, it may be that kind of transportation sector, rides on demand, also accommodation services too. But again, the devil will be in the detail. Very quickly, next steps. As I said, The impact assessment performed by a third party has been delivered, taking into consideration the feedback from the public consultation. That is now being debated. There is a meeting of the VAT experts group coming up, actually in 2 days' time. So that has various experts from across the EU who will be looking at the different options on the table, providing their feedback and recommendations. But actually there'll then be a lot of further debate, meetings, discussion between member states. Lots of considerations, not only the impact to tax revenues and cash flow, but also the impact on things like technology. A lot of these changes will require changes to technology at a individual country level, by tax authorities and governments, but also at a European level too. And then the plan is for us to have a proposal adopted by the Commission, released to the public in autumn 2022. My understanding on this is it's likely to be early October.
Thanks, Alex. So the €1 million question, which is probably on everybody's lips, when will this actually bite, hit, take place, and actually impact businesses, do you think?
Very good question. It is the €1 million question. Look, a lot of these changes will take time to implement. Just because the technology change, we will need detailed implementing regulations to be drafted and passed. Could we see some of these changes come in a more staggered approach? So not all three work streams within VAT and the digital age at the same time. I can see that certainly. Maybe there are some quicker wins here, particularly around the single VAT registration. Just trying to leverage and scale iOS and OS. Could that be as early as sometime in 2023 or early 24? Yes, I think that's very possible. Some of the other changes, could be as late as 2025, or some, more kind of longer term. But certainly watch the space. The European Commission can move quickly, and I think there is a lot of appetite for this change. And let's just remember, this isn't radical and revolutionary. This is really just the next stage in an evolutionary process by the Commission. We've had huge VAT changes, since 2010, 2011, 2015. We had the quick fixes in 2020, and really this is just the next chapter. Bringing the VAT system in line with the new digital age.
Thanks, Alex. And what a chapter it will be. I think it's going to be keeping us all busy and in jobs, which is a good thing, I guess. I'm going to try and wrap up so that we can allow some time for questions. We've covered a lot, so let me try and summarize and do some quick takeaways for you all. As a wrap-up, VAT in the digital age really, I think, is a technology conversation at its heart. We've talked briefly about the single VAT registration and the importance of understanding information about where your customers are, the different rates and rules in those countries, and also discuss the importance about collecting the right data at the right time for those customers so you can report the tax properly. We then moved on to digital reporting and e-invoicing, which really can't be solved manually, and it's typically going to hit all of your core billing systems, whether they're legacy ones or new modern ERPs. And then lastly, we moved to the platform economy, which ultimately is a new disruptive play, and it introduces business models that perhaps have not existed before. So I truly think the intersection of technology and VAT is becoming very, very interesting indeed. And to close this formal presentation, what are the key takeaways? Well, stay up to date. This is complicated. Let's be honest with ourselves. It's hard stuff. It's not easy. It's also a major EU initiative. So it's important to stay up to date, monitor and expect changes, attend events and webinars just like this one, and read up on the subject. We have a wealth of information, mostly authored by Alex, which is available on our website that you can go and get at any time. And it's always up to date as well. Alex blogs most days. Number two, there are options on the table. Hopefully you've seen that today. I think there were 9 for the single VAT registration, right? But it's fluid, so we need to keep an eye on that. There's kind of quick wins and possible simplifications, like the reduction in the EU VAT registrations, but that needs to be considered really now as part of future compliance planning or business modelling. So just have that on your horizon. And then this, I promise, is the last slide before we open for questions. We really expect this to be a catalyst for e-invoicing. I mean, it's going in fifth or sixth gear, arguably, already, but I actually think this is welcome news because we need some harmonization. We need some standardization, not only so businesses can just roll out and scale quicker, so that even technology providers like Avalara can just respond quicker as well and be on top of the tech stack that's needed to actually deliver. And on that, you need to work with trusted partners and accountants who can support you on your journey, the ones that can understand the process and use their prior experience to guide you through that and help you scale quicker to the changes and the demands to actually meet those changes. And last but not least, this is not just a tax issue, it's a business issue. So you need buy-in from key stakeholders, you need budget, you need to do the appropriate planning and reviews of existing supply chains, of business models to see how they could be impacted. I know I make that sound easy. I know that's a big job, but we wanted to try and just summarize some of the key takeaways for you and your business. So that concludes our formal presentation, and I appreciate you've heard a lot of information, and you may want to revisit that in the future or indeed reach out to us, so our contact details will be available at the end. I do hope you've enjoyed it and that you found it useful, and I will hand over to Jo now for any Q&A. Over to you, Jo.
Lovely. Thank you very much. That's great. Thank you for a lot of information there for everyone to take in. But we have got some questions and we've got a couple of minutes remaining, so we'll just take a couple of those if you guys don't mind. So the first question is, why the €150 as a threshold for IOSS?
I'll quickly jump in there. That's because it's the customs duty threshold. So any goods below 150 individual consignments, there's no customs duty levied. So it means those goods can travel through a green channel free of any additional tax or duty being levied.
Okay, that makes sense. Lovely, thank you, Alex. Next question, do you think this will lead to delays in European countries rolling out their planned mandates?
My direction is absolutely not. Countries are going to move ahead, full steam ahead. France is finalising its requirements for its new 2024 regime ASAP. So that will still go live in July 2024. Other countries are doing the same thing. There is probably now a dozen European member states that currently have a pilot regime, a voluntary regime, or have announced plans for a compulsory mandate for B2B.
Okay, thanks, Rita. That's very helpful. And time just for one more, if you don't mind. We have a question. Clearly, Avalara knows the space really well. Do you offer a service to manage this problem for my business because I want to outsource it?
I can take that one, Alex. So yes, we offer a range of VAT solutions, both services and software as well. So thinking about what we've discussed today, helping with single VAT return registrations, we'd be able to aid with that. With e-invoicing and digital reporting, I referred to it earlier, but we actually acquired a business that is an e-invoicing business last year, and I work quite heavily on the integration for that. So we are able to respond to all of the e-invoicing mandates that are coming through. It's keeping us very busy. It's very interesting, learning a lot every day in that expanding market. And with the platform economy as well, it needs to be defined, as we kind of alluded to, but once that is, we pride ourselves in ensuring that our content and our solutions are able to support as needed. So the answer is yes. Any more questions, Jo?
Yeah, no, sorry, we're struggling with the mute button there. Thank you very much. I'm afraid we're out of time, unfortunately, but it's been a really helpful presentation, as you say. It's just so much to know about the topic, and we went into great detail, so it's much appreciated. I hope the audience have found that useful as well. So yeah, just thank you very much to our attendees and to Ruby and Alex, and yeah, thank you for all your help today.
Our pleasure.
Thanks
Thank you
us.
ever so much.